This Protein Report interview with Jim Mellon, investor and author of Moos Law, an investor's guide to the new Agrarian Revolution, was recorded on January 28, 2021. For more conversations with entrepreneurs and investors in cultivated meat, subscribe to the Brave New Meat podcast on Apple Podcast and Spotify. And Jim, welcome to the show. How are you doing today?
Very well. Thank you very much, Doug.
Well, it's really a pleasure to meet you, and enjoyed reading Moos Law. Got a lot of questions for you. And before we dive in, could you just give a little bit about your background as an investor and entrepreneur and how you got into this space?
Yes, I started a long time ago in Hong Kong as a fund manager, and having left university, and then I was sent to San Francisco, and I was fortunate enough to be at the, I told you, but be careful about this dripping blood. But anyway, I was fortunate enough to be at the kind of beginning of the Silicon Valley explosion, which was, believe it or not, in the mid 1980s. And then I became a fund manager for emerging markets, including in Russia and in China and so forth. And by the year 2000, I had enough money to go off and do my own thing. So I basically went into all sorts of ventures, into German property, mining, and particularly into biotech. And from biotech, I got the idea of this food revolution that we're involved in. In other words, I got an inkling that this was going on and that's something that I should be looking at. And when I find something that's really interesting, I write a book about it, and also try and have a commercial angle to it as well. So we set up the company Agronomics a couple of years, no, actually less than 2 years ago. It's quite, it's done very well since it was started up, and run by my colleagues, Anthony Chow and Laura Turner, and with a team that will shortly be beefed up. I think that's the wrong word, but will be bolstered in the near future. And Moos Law is the result of those investigations. So during the process of writing Moos Law, which was in the lockdown period, which we're still in, obviously, but was in the Isle of Man, where we mostly live, this was a very good way of giving me something to focus on, and interviewed 35 key opinion leaders in the field, all of whom you will be, more than familiar with. And I put the book together with the help of colleagues, and here it is. It's out now. So.
Yeah, and this book was really invaluable to me. So I've gotten in the space, I guess a little over a year ago, and you basically did all the research for me. So it kind of had everything teed up, and I want to go through some of those companies and some of the viewpoints that you got from folks. But why did you tailor the book specifically to investors? And you could expand a little bit on the title and the play on words there with Moore's Law.
Yeah, great questions, Doug. Okay, so Moos Law is a riff of Moore's Law. And for those who don't know about Moore's Law, it was a term invented by Gordon Moore nearly 50 years ago. He was the boss of Intel, the famous American semiconductor company. And he worked out that every 18 months approximately, the efficiency of semiconductors would double and the price would halve. And I thought, well, the cell ag meat and fish business is probably on the same trajectory. If you look at the first burger that Mark Post put together in 2013, $300,000, and now I'm so sorry about this. I look like,
oh, no worries, no worries.
And it's a shaving cut, everyone. And I haven't been beaten up by Defino or something like that. So I thought, well, this is a good, descriptor of what's going on. So basically, there are two phrases in the book which I'm very proud of. One is Moos Law, and the other one is griddle parity. Griddle parity is when the price of plant-based and cell ag or cultured meat comes down to at or below the price of conventional meat. And, in both cases, we're moving quite quickly towards griddle parity. And griddle parity is a term that comes from the climate change electricity industry, where wind power and solar power, the aspiration is to get them down below the price of fossil fuel generated power. And in fact, they are in some cases already there. So it's just basically, I'm riffing off two well-known phrases, but I think they describe the opportunity and the progress of this industry. And the fact that you've got into it in the last year or so, and so many other people are getting into it, is just so inspiring and wonderful, because we're engaged in a major revolution. It's a revolution that hits every box in the zeitgeist. I mean, it does, and particularly during a pandemic, because we know that the food supply is precarious, has caused the pandemics of the last 20 years, and we need to avoid it. And if there is a bacterial pandemic, God help us, and we don't have the necessary antibiotics to combat it, this pandemic will look like a walk in the park. Well, it'll be like the Black Death. A third of the world's population was wiped out.
And so, and you've talked about this with obviously within the book. How do you describe this opportunity as you look back over your career? Other big themes that you've gotten involved in terms of the size or scale or scope of the opportunity, specifically for investors?
Okay. Well, when you start work, I'm sure it was the same with you. You basically get pushed into whatever someone will give you a job for, and in my early days, it was in emerging markets, and then the nascent boom in San Francisco-based, largely San Francisco-based technology companies in the United States. And frankly speaking, I could be working in a shoe shop or in a brokerage firm in London, because those were the other kind of jobs that I was offered when I left university. But as you go on, you become more experienced, and you realize there are some meta themes that influence our world. Some of the meta themes, China and the US, who's going to be the great power in the next 100 years, we're all familiar with. Climate change is probably in the top of all the meta themes, but it's very well addressed. I mean, there are so many businesses and opportunities for investors and companies and so forth, quite rightly, in climate change, and there's nothing I can really add to that. So the two meta themes that I'm particularly interested in, being a biotech person for the last 15 years, are number one, the science of longevity is catching up with the aspiration, not if I keep on cutting myself, but it's catching up with the aspiration of most of us to live a longer and healthier life. And that, notwithstanding the pandemic, and in fact, perhaps because of the pandemic, is an accelerating industry. It is absolutely the case that the old trajectory of we're going to be born, learn, earn, retire, and expire is coming to an end. We're going to live much longer. And we have to take that into account in all sorts of calculations, financial, societal, career, especially at a time of changing technology. So longevity is my day job, and we have a company called Juvenescence, which will be going public sometime in the middle of this year, probably in the United States. But alongside of that, and perhaps because of biotech, because the techniques of growing meat and materials and seafood in a lab come from biotech, almost all the stuff, the equipment, is originally biotech equipment. The nutrients and the growth factors are biotech by origin. And so the biotech gave the pathway for these companies to move towards the industrial production of protein. And we are, both in longevity and in the food sector, in the kind of dial-up phase of the internet, we know that this is going to be a huge industry. We don't know exactly how it's going to evolve, but it's going to be massive. So the scale of the opportunity, let's put this in perspective. I'm in Spain at the moment. Spain is a medium-sized developed economy. Its GDP per capita is about half of that of the United States, but in total GDP, it's $1.4 trillion, which is not a sum to be sniffed at. In the United States, your Senate and your House of Representatives is debating whether there should be the biggest stimulus package ever, which is $1.9 trillion. So $1.4 trillion is a lot of money. That is the size of the meat market around the world. If you add on top of that seafood, $200 to $300 billion, plus on top of that materials like leather, threads, cotton, and so forth, you're looking at an addressable market of $5 trillion, approximately a quarter of the size of the United States. There's a huge prize here for entrepreneurs and companies that get it right. They estimate that if nothing changes, and we carry on down this path of environmental destruction, animal cruelty, and intensive farming on a massive scale, because of the demands of Chinese and Indian consumers in particular to have as much animal protein as Americans, Brits, and so forth, that we'll have to double the production of protein by the year 2050 with ecological disaster as a result. So something has to be done about this. And lo and behold, something has been done about this. And you've got about 30 investable companies around the world. And there are 60 companies or so in total. I think only about 30 of them are appropriate for investment, at least to my mind, which are all with prototypes, all with something in hand. They're not science fiction lab companies that are hoping to develop something. And you're already got Singapore with approved chicken from Eat Just, which is grown in a lab. You've already got Blue Nile very much on track for a launch of its seafood by the end of this year in the United States with the approval of the FDA. And probably the meat companies will be on the market in 18 months' time. And so and then you've got companies like Vitro making leather, which are already producing stuff for commercial contracts. So we're not, we're not very far away from a huge revolution.
Yeah.
Good for investors, but most importantly, good for us. No antibiotics, no hormones, no pandemic risk, no toxins, as there are in almost all the seafood that's eaten in the world today, and potentially a lower cost of production and a lower cost for consumers of key proteins. So it's just a remarkable time to be alive. I'm really excited about this.
Very exciting. And I do have some questions about Blue Nalu. I heard you with Lou Cooperhouse last week. But before we dive into that, specifically with investors, I've talked to some other firms and they refer to this industry as patient capital, in the sense if you've been investing in software and you've got a fund and you're looking for a 5-year exit, the timelines might not be there. Do you agree with that synopsis? And how do you explain the timeline for folks that might say that, hey, this is a patient capital space and we're going to have to slow walk this?
Well, I always think of the term patient capital associated one of the greatest fund management failures in the world, and it happened to be based in Britain, a man called Neil Woodford, who fried the savings of many millions of individuals through his so-called patient capital strategy. And I think patient is, to my mind, a word that indicates, give us your money for a long period of time and we'll see what we can do with it. Actually, in my experience, anything that's good always happens much faster than you expect. And so I would say that in the companies that we've invested in and others have invested in, you're going to have 3 outcomes. And I mentioned these in the book. One is fold, because that's the nature of capitalism. There will be companies that go bust, which is the reason for diversification. It's the nature of the world. Number 2 is sold, and I think the majority of the companies will be sold because they're innovators in the cell ag space. They all have defensible IP, unlike the plant-based companies, which typically don't. And those companies will be very attractive to major food platforms like Unilever, Nestle, Danone, Tyson, Cargill, and so forth, because actually those companies are in the business of selling food. Where the food comes from, as long as it's legal and healthy and consumers want to buy it, I don't think they really care. They want food to sell that's appropriate for the times. And this is a bit like in my state industry, the biotech pharma industry. Pharma industries typically don't innovate anymore. They basically buy in their innovation from small or medium-sized biotech. I think it'll be the same in the food industry. So most of these companies will be sold. And the last category is bold. There may be 1 or 2 that carry on and become major household names. I would imagine, I think, because of the quality of Lou's management and the team he surrounded himself with, that he probably fits in that category. And seafood is a very unique category compared to meat, because the lobbying is not as strong against cell aquaculture, as he calls it, and it's not as the path to regulatory approval is not as difficult. So it could be that Blue Nile goes on and becomes an independent company with its own distribution, name, et cetera, et cetera. But if I had to bet, I'd say most of these companies will be bought.
Yeah, and you mentioned a few companies there. So I know Tyson's and Cargill's have both invested in this space and obviously have domain expertise with making meat, distributing meat. Do you think, and you also said Nestle, so do you think that there's something about current meat companies versus a broader category of just food companies that might acquire startups in this space? Or do you think this is something that's going to still remain within like the meat company territory?
Oh, no, good point. Oh, I think that big companies which are not normally associated with meat, I mean, it could be Kellogg, or it could be Nestle, or it could be really any of them.
Yeah.
It could be companies outside of the food industry, but possibly could be acquirers of these businesses. But you said startup, and that's a reasonable point. But I don't think these companies will be acquired as they start up. I think they'll be acquired when they're billion-dollar plus businesses, and hence the opportunity for investors. I don't, the big companies, they're normally late to the party, and it could be that they're paying billions. I don't know if you saw, I'm sure you did actually, Doug, the other day, that Beyond Meat tied up with Pepsi Cola to develop a new line of plant-based foods, and it added 30%, which is $3 billion.
Shot through the roof. Yeah, it did.
Yeah. And Beyond Meat's back over $10 billion in market capitalization. This is just the beginning. I would think there'll be several companies that are in the $10 billion plus market capitalization over the next few years. And there'll be three things that will propel that. One, the costs will come down, the costs of, in particular, nutrients and growth factors, which will, are no longer animal derived. The second will be consumer acceptance that this is good stuff to eat, and that will be a challenge, but the surveys that have been done show that about 70% of consumers will have a go, will try it. And then the third thing will be that the recognition of the good that these companies are doing. The meat lobby will start saying they're frankenfoods, you shouldn't eat these, that, come from cells, as if animals don't come from cells. And, but more and more consumers realize that, farming is not just cruel in the way that it's practiced, generally speaking, but it's also environmentally highly destructive. The reason the Amazon rainforest is being chopped down is because farmers want to grow soybeans, not to feed humans, but to go into animals, which are very inefficient converters of plant protein into meat. And mothers who have children, I'm not saying fathers aren't interested as well, but mothers are a particular focus group that are really worried about mercury poisoning their infants and microplastics in the fish that their children might eat. So the growth of cell aquaculture is going to be a process that alleviates that concern very, very, very big time. So everything, as I said earlier, ticks the various boxes, unless you happen to be a member of the U.S. Cattlemen's Association, or you're a chicken farmer, or you're an egg producer or a dairy farmer. But all of those industries could be reimagined to provide higher quality jobs, to produce crops for human beings, which are much more valuable than crops for animals, and to situate possibly the bioreactors and the sites of production on existing farms. So it's not a reason to despair for the 1% of developed world populations that are engaged in current agriculture, and 0.5% of those are actually engaged in animal farming as opposed to producing crops. There's lots of things to be optimistic about for them as well.
Yeah, and I want to go back to a term that you used, describing them, we'll call them incumbents, being late to the party with this. Do you feel that these companies will have to bring a product to market before they'll be acquired, or do you think that they could be in the R&D phase, and there could be an acquisition by a Nestle or a Heinz Kraft or a Tyson's of one of these companies?
I think they'll all have to bring a product to market
Yeah,
to see how the consumers react to it.
got it.
So I don't think any of them will be acquired. Well, who knows? I don't think any of them will be acquired uh, based on hoped for outcomes. I think that they'll just have to have something on the market. But on the other hand, some of them are actually partnering with existing big companies for distribution.
Hmm.
So that might be a way forward for some of them, is that they actually use the distribution might of some of these big food companies to act as agents for their products in parts of the world. I also think that you're going to get a lot of licensing deals, because if your country is the absolute leader in this space, and as it is in so many other things. There are companies in Holland, there are a few in the UK, there's a couple in Singapore, one in Japan that I know of. But generally speaking, it's a US industry. Unfortunately, or fortunately, most of these companies haven't got a clue how to sell into Europe, Asia, or whatever. And so there'll be lots of licensing deals done around the world. And I think that will be particularly the case in countries which are food insecure, which they have to import a substantial amount of their food. So Singapore is the first country to regulate and approve the chicken stuff that comes out of Eat Just. I think the Middle East will be following up on that, because they import 95% of their food, and they can tag along on the Singaporean regulatory authority for comfort that this stuff is safe. And you'll get countries like Hong Kong, also food insecure, behind it. But then you look in Europe, the UK imports half of its food. And if you go back to the Second World War, the choke point for the UK was the Atlantic convoys bringing food in from Canada and the United States. They were being sunk by U-boats and there was a point at which Winston Churchill thought that they would have to surrender because they wouldn't have enough food. If the UK could produce all of its protein, then that would be a great thing, apart from creating a national industry. So I just think you're going to have monumental amounts of money coming into this, because at the moment, as you rightly point out, R&D, prototype stage, blah, blah, blah. But when they start buying bioreactors, which are 20,000 liters big or even bigger, and they start trying to get marketing and distribution going, the amount of money they need will be huge. So about $1 billion into the industry so far. We estimated by the middle of last year it was about 400 million, so another 600 million's come into it since then. We think by the end of this year it'll be $5 billion. So the trajectory is like that.
Wow. And cultivated meat is just part of the story. You also in Moos Law, you talk about plant-based proteins, plant-based meats, and you interviewed several really smart people that are in that segment of this industry. Pat Brown, CEO of Impossible, Chris Kerr is the chief investment officer at New Crop, and Roger Leinhardt at Live Kindly. And they shared a assumption that cultivated meat would not scale. Do you know what the pattern is that you're seeing with their assumptions? And then what assumptions do you have that they don't share that you think it will scale?
Well, that's a great question. I didn't actually interview Pat Brown. I interviewed Ethan Brown of
Oh, excuse me. Okay.
Beyond,
The two
because
Browns.
the
Yeah.
two of them, if one is speaking, the other one won't speak to you. So I'm not making that up, by the way. So I spoke to Ethan, and funny enough, we were eating Beyond Burgers that night here in Spain. And he's a charming, very motivated, very clever individual. He actually had a more open mind on the conversation I had with him than you might think from public pronouncements. Pat Brown is the one who's poo-pooing the idea of cultivated meat getting anywhere, but Ethan Brown is quite open to the idea of Beyond getting into that business at some future point. And so I think he recognizes that this is coming up on the rails. Roger is, Roger is a very open-minded investor. He can see the opportunity as well in cell ag stuff, but he's building Live Kindly. I mean, I think that Live Kindly is just a really, really smart organization, and we do have a substantial investment in Live Kindly, and I think that he's great. I'm trying to think of. We tried to interview Corn, the British company. Couldn't get any traction out of them, but they're very big in Europe, actually, Corn, and they're also in the United States. And we've got the Meatless Farms in the UK as well, which is doing pretty well and has raised a lot of money recently. And I spoke to Morton, who's the CEO there. The fact of the matter is that plant-based meat is the first battering ram against the conventional meat industry. It's gaining market share incredibly quickly, and post-pandemic, when it's available in food service, well, food service is open generally, it's going to do really well. And so many of my friends, so many of my acquaintances have tried these burgers and can't tell the difference with the real thing, and realize that these burgers, even if they do have, some e-colors and all that sort of stuff in them, are fundamentally better than eating, burgers from McDonald's or McDonald's as was. And so that's the first battering ram. But let's face it, you can't get the price of plant-based meats down much below the price of conventional meat. That it's because of the way in which they're produced, and it's just not possible. Conventional meat, however, faces a real big price challenge ultimately from cell ag meat, because the inputs are 2 to 3 times into cell ag meat. And for cows, as we mentioned earlier on, it's 25 to 1. In chicken, it's 9 to 1. So it's a possibility that in 10 years' time, you could see cell ag, which is fundamentally much better for you, much better for the planet, et cetera, could be cheaper, taste better, be engineered with all sorts of good stuff, with no bad stuff, for the consumer than conventional meat. At that point, and Rethink X in the UK suggests that 50% of the meat market by 2030, which is only 9 years away, will be either plant-based or cell ag-based. At that point, the tipping point has come, and the conventional meat industry will become a hobby industry. It will just shrink to nothing. And rather like the milk industry in the United States is being hammered out of existence by the development of plant-based milks, which were nothing 10 years ago and now 20% of the market, you're going to see the same thing in the meat industry. And for me, that's a good thing, because my passion is anti-cruelty to animals. And so many of the investors in this field have the same passion. But for consumers, ultimately, it's about taste, texture, and price. And I think that eventually cell ag is going to win hands down.
And actually, the first time I heard you was on Dave Asprey's show. So I know you talked about juvenescence and longevity as your day job, and sort of you got into this. And that's also something that I'm really, really interested into. So it's kind of interesting seeing these two worlds cross over. But did your interest and your focus in that lead you into this? And what are sort of some common themes? I mean, other than from an investment perspective, just personally getting involved in these issues with longevity and animal welfare and ultimately cultivated meat. How do you thread those together?
First of all, I love Dave. He's such a cool character. He's wonderful.
Yeah, he's awesome.
Yeah, he is. And in fact, he sent me a box of bulletproof something or other goodies, and it's still in London because I haven't been able to get back and get it. Secondly, there is a link between longevity and healthy eating, obviously, but that's not really the reason that I latched onto the meat thing. It's because it's just that the science is here today and the need is very pressing, and people weren't doing much about it. So the major investors in this field, which is fantastic, are typically philanthropic. So Chris is a good example of that. You've also got Jeremy Collar out of the UK. Roger, I think, is effectively a philanthropist, even though he's got his Blue Horizon. He's very philanthropically oriented. I would say that my motivation is primarily philanthropic as well, but we do need to have vehicles that the general public can invest in, because the money from philanthropists who are interested in animal welfare is not enough to propel this industry to the heights that it needs to get to. So we started Agronomics. We have the second company that's starting up now, new agrarian company. We hope to raise at least $300 million for that company. And so, you know, the money from us, the money from Roger, from other people will form a big part of the necessary fuel on the fire to get this thing going. But ultimately, some of the companies will have to go public because the capital requirements are enormous. You know, they're huge. To feed 100,000 people, you need $100 million for plant and equipment. Admittedly, that plant and equipment will last for 20 years and feed 100,000 people for 20 years, but there's still a lot of money because there's many multiples of 100,000 people around the world. So, you know, this is going to be on a scale like the energy revolution, you know, the solar, wind infrastructure projects that absorb so many trillions of dollars on an annual basis. So it's going to be a big thing.
And within these meta themes, climate change, longevity, food, more broadly speaking, you've also talked a lot about in some of your blog posts about inflation and hedges with that, precious metals. How do you think about like an overall portfolio, you know, accounting for hedging with precious metals or maybe Bitcoin or something like that? I don't know if you're a Bitcoiner, with investing in some of these big meta themes that you talk about, just a balanced portfolio across those views.
I think, Doug, that's something for you to do. I've got far too much to do at the moment, but it's a good idea. I mean, you know, I do think we're going into a period of inflation. I don't think you can have all this money printed around the world. A lot of pent-up demand, high consumer savings in the US and the UK as an example, because of the consumer sitting at home not spending any money, and, you know, government handouts left, right, and center. Without inflation coming as soon as the economies return to normality, which will be not too far in the distant future, because, you know, the US and the UK are vaccinating people at a very rapid pace, and you know, and particularly the people who are most vulnerable to COVID. So I think that I know something about Bitcoin. I do have a small investment in Bitcoin. I think it's at the moment it's speculatively priced, but I do think it's going to play a very important role, or the cryptocurrencies will play a very important role going forward into the future and disrupting the current system of fiat money. How that plays out, I've got no idea. But, you know, this is going to be like the internet was 20 years ago. You don't really know what it's going to be doing, but now it's entwined in our lives. And I imagine that Bitcoin et al. Will be entwined in our lives in 20 years' time. But, you know, there's only so much that one person can do. I've got two major themes to focus on. One is longevity. Another one is what we're talking about today. All the rest I leave to people like you, because, or Dave, because, you know, there's plenty of bright minds out there that can do it much better than I can. But we do live in a world of great change, great opportunity, and great risk.
Let's dive into some of those opportunities. So segments within the cultivated meat market. So you've talked a little bit about what we'll call the picks and shovels companies, you know, harkening back to the 49er days where, you know, the most successful people were not mining for gold. They were, you know, supplying the miners. And to my knowledge, most of the companies in this space that are getting investment are not picks and shovels yet. You know, the companies like the Blue Nilus that are making the end products are investable. And you did segment earlier on the 60 companies in this space, 30 being investable. Do you think those picks and shovel companies will be investable, and what point will that be available?
Yeah, good question. Basically, the problem is that the picks and shovel companies are generally very large companies that are involved in the biotech space. So they make bioreactors for biotech companies. They make nutrients for biotech companies. They make growth factors for biotech companies. So German Merck is a good example of that. Sartorius, also out of Germany, is a good example of that. There aren't many companies that are investable for us, that are specifically picks and shovel companies, a massive dilution of the biotech aspect and other aspects that these other companies have. However, we have been looking at 2 or 3 of them. So the areas that investors might want to look at are the scaffolds. So when you go into the bioreactor with your muscle or your fat or your connective tissue, you need to hold, I suppose is the best way of putting it, firmly the cells on a form of scaffolding. And so scaffold companies are of interest to us. There are companies that are involved in sensors because the sensing of the way in which the cells are reacting is very important. And they're of interest to us as well. And what I'm going to do is we're going to update the website for Moos Law. So as new companies come along and opportunities come along, and some of the existing companies do different rounds of financing or they go public, we'll be updating that to inform investors. But at the moment, there's very little that you can invest in. There's a vegan ETF out of the United States, which, as far as I can see, invests in Facebook and Google. I've got no idea what they've got to do with veganism, but maybe some of their employees are vegans. I don't know. There's our own Agronomics, which is listed in London, which is, it's got 14 investments in this area. And apart from that, I don't think there's any publicly accessible way for people to invest in this field. So I'm sure, and I hope that many other people will come along and create vehicles so that the field can get the financing it needs and deserves.
Yeah, let's talk about agronomics. So this was really, really cool for me. In preparing for this, just diving into this, I didn't know that this existed for unaccredited investors to be able to invest in. So this was very, very interesting to me. I think it's one of its kind. I mean, if you want to get into the alternative cultivated meat, plant-based proteins, this is really, to my knowledge, the only way that someone could do that. Is that accurate?
I think so. It's a London listed, so it's listed on the London Stock Exchange company. It's not very big. It's only about $100 million in size. I've got no doubt it will grow. And it has myself as the biggest shareholder. So I, for instance, in the most recent round of financing, I put up the largest amount of money. And it doesn't have an annual management fee, but it does have a performance fee. And I think it's, it's a very, I mean, I don't know what the securities laws are around this, but I think it's a good way of participating in many of these companies. So for instance, it owns, if I said 5 or 6% of Blue Nalu, it owns a percentage of Live Kindly, a percentage of Mosa, percentage of Meatable, percentage of Vitro, percentage of Legendary, the dairy company out of Berlin, Shiok Meats, which is the shrimp company out of Singapore, and so forth. So there are 14 companies in there altogether that represent approximately half of the investable companies in the sector. And ultimately, I think agronomics is going to do interesting things beyond just investing in other people's companies. It may look for white space opportunities itself, such as Juvenescence has, backing scientist entrepreneurs into new areas. And it will certainly be involved in licensing. So licensing deals between companies in the US, companies in Europe, and investors in regions that these companies wouldn't otherwise be able to access. So I think it's I'm super excited to be involved in that one.
Yeah, and it's not set up as a venture firm. As I mentioned, unaccredited investors can get involved. So I know through my Charles Schwab account, it's available, which is very exciting.
Yeah.
Why was it set up not as because it seems like a venture fund, right? Because it's investing in these early stage companies. So how does that work? Is there a preferred share versus common shares? Is there, how does an investor make money? Is there expected to be a dividend? Just how it works?
Yeah, so it's no, there are no preferred shares, no debt, no warrants, no nothing. It was what they call a shell company. I'm sure your listeners are familiar with that. It was a company that did something else, and it was repurposed to be agronomics. So the share price performance since it became agronomics has been exceptionally good, right? But it's has a great future ahead of it, I think. So it's a way, you call them unaccredited investors. We don't have that in the UK.
Oh, okay.
It's largely for British investors, but Americans can buy it. Now, how are they going to get money back or dividends or whatever? Well, if the companies get sold, then I guess the money gets returned to the investors. And I would think that in the next 7 years, most of these companies will be sold. So at that point, it's probable, unless something new happens, or I don't know, but it's probable that a lot of the agronomics investments returns will be returned to shareholders. So, but we're just at the beginning at the moment. So I know 7 years seems like a long way off, but in the first 2 or 3 years of that 7-year period, I think we're going to be making some really exceptionally good investments, because the opportunities are getting better and better by the day.
And previously it was focused on biopharma. I think it was under the name Port Aaron Biopharma and focused on longevity. So if someone invests in agronomics, would they have exposure to both longevity as well as cultivated meat?
Yeah. There are, if I said there's 1% in legacy investments which are being liquidated, then I think that's correct. So no, it's basically entirely what it says on the tin, which is the new Agrarian Revolution. It's cell, ag, and plant-based foods.
And I know Blue Nalu's in the round there, or there's been multiple investments in Blue Nalu, and you guys talked about this last week with Lou, but they've recently done a debt round as opposed to an equity round. What sort of impressions are, how should the market read that this is a debt round for one of these companies as opposed to an equity investment?
Well, that's a great question. So it's debt in name only. So the way that these things happen is that the investors come into what is effectively a form of preferred debt that's convertible into equity, but it's mandatorily convertible into equity unless some disaster happens. So $60 million, and I think I'm right, 5 million of that came from agronomics, went into the recent Blue Nalu round alongside a whole load of accomplished investors and food industry investors, and that money goes into this convertible loan note with a cap on the valuation, and the cap, and they raised 60 million, and the cap on the valuation is 190 million. Now, it could be that in the next round of financing, when that convertible has to be converted into ordinary shares, that the valuation could be 500 million, who knows? But the investors in this round know that they'll be in at a maximum valuation of 190 million. So it's debt in name only.
It's convertible debt, not just not like a debt that someone would get from like an institutional bank.
Absolutely. And I don't know of any of these companies that are currently financed by debt from a bank or a venture capital debt line or something like that. However, I do think that in the future there will be big infrastructure debt type opportunities in this field, because if you think about it, if Blue Nalu is going to open 150 factories around the world to distribute its make and distribute its products, it's going to have to finance those, and there may be attractive debt opportunities, as there was, not so much now, in the solar or the wind industry in the early days. And so that's going to be something the investment bankers no doubt will be salivating over. But at the moment, the debt is just a debt in name. It's not really debt.
And they were one of the highest evaluated companies in your book. You have it's kind of like the Morningstar ratings, 1 through 5 stars, but it's 1 through 5 stakes, and they were a 5-stake company. Could you describe a little bit about that rating system you came up with, and what made something a 5-stake versus a 1-stake?
There's nothing scientific about it,
mm-hmm.
but we've elected not to go into niche industries where there's an uncertain market potential. So foie gras is one of them, and there are a couple of companies in foie gras. Fur is another, and kangaroo meat in Australia. which I don't think anyone eats anyway, even from live kangaroos, is another one. So that excludes a number of companies just off the top.
Mm-hmm.
We're looking for veteran management teams, people who are, have some business experience, who possibly have a food background, even better, and who have defensible IP. And because the IP will be very important in the acquisition or otherwise of these companies. And so those are the key factors that we're looking at. Meat is the biggest market, and there are plenty of players in that area. As you know, there are one or two companies that are trying to make steaks, which look like steaks. I think that's a great idea, but the easy pickings are going to be in ground meat to begin with, and that's an area that we've focused on with the bulk of our investment in the meat field. We're covering basically every species except for the major species, except for lamb and for duck. I don't know if you know, I put it in the book actually, that the duck consumption is in China is almost as big as chicken consumption. It's incredible.
It's amazing. Yeah. And I know Memphis Meats is
we don't
pursuing
eat duck,
Yeah.
do we? No, and or we didn't eat. I mean, I don't eat meat anyway. I'm sure you don't either. But when I was young, we didn't eat, very rarely eat duck. So those are ones that were just, we basically, I've been a fund manager for so long. Anthony's worked with me for 15 years. We have I can't say it's an infallible instinct, because it's not. Lost money in many things, but it's, we have a gut feel about what are the better companies, the ones that are properly constructed, have a very good business plan, understand the regulatory pathway, seasoned management, defensible IP, and that's the ones that we gave the highest ratings to. And but for most investors, it's just not possible, unless you're seriously wealthy, to get involved in these Series A's, B's, and C's, because there's no way of doing that. And the one thing I don't like, and I've never liked it, is these SPVs that are created typically for investors to go into, retail investors to go into shares, because you get encaged, you're caged by these managers of the SPVs who charge high fees and performance fees for you to be involved in that. So one of the reasons that agronomics has been so successful in the stock market is because it doesn't have those characteristics. You can buy and sell the shares as you wish.
Yeah, very cool. Yeah, like I said, I was very excited to find out about this, and when I called up my Charles Schwab account, they said, "Yes, absolutely, we can do that." So, very, very cool. And
is Charles Schwab still alive, by the way? He's known as Chuck, isn't he?
I think that's a branding that they redid. Yeah, talk to Chuck. Right. I assume he's long since gone. I don't know.
No, I don't think so, because he started his business when I first started working in San Francisco. So he
really,
I think he must be in his 70s or 80s. I bet you he's alive. As soon as we finish, I'm going to look him up.
I am too. I didn't see this conversation going that way, but yeah, is Charles Schwab alive? Okay.
Yeah.
We'll have to
and those, I mean, it was amazing. In those days, even institutions would pay 0.5% commission to brokers. Now it's inconceivable that you pay anything, basically.
Yeah.
So the world has completely changed. But Charles Schwab was the man who actually revolutionized that and gave access to so many investors to stocks. Otherwise, they wouldn't have been able to do it, basically.
Yeah, I mean, going back to our inflation conversation, I bought my first gold ETF this year because, in my whole life, inflation has just never been a factor, and now it's potentially on the horizon as something to start thinking about. So diversifying out of equities and into gold, and thinking about alternative things like longevity and cultivated meat and Bitcoin, and it's a wide world out there of other things to get into with all these technologies come online.
I completely agree. And gold, John Maynard Keynes called it a barbarous relic, but actually, it's kept pace over thousands of years with purchasing power, and so it should form the basis of some component of anyone's portfolio, and particularly now, because I don't know if you know that the Fed's balance sheet in the United States today is 10 times bigger than it was in 2008. I mean, there's reckless abandon in terms of, and it's not just the Fed, but the Bank of Japan, European Central Bank, Bank of England, etc. They've juiced up the money supplies so big. That's one of the reasons you're getting all these Robin Hood bros, speculating in stocks that have very little fundamental merit, and it's because of the abundance of this money that's floating around. But at some point, they're going to have to rein it in, because otherwise there will be rampant and destructive inflation. So just watch this space.
I am carefully trying to. Going back to the companies you guys were evaluating, though, if you kind of put on your entrepreneurship hat and look at this and the landscape that you guys have, and you've got a wide view of this, of all the companies you've interviewed and invested in, where do you think the holes are that entrepreneurs could come in and potentially start a company in this space?
That's a great question, and it's not one I'm going to answer, because we're looking for those holes ourselves.
Touche.
No, I'll let you know when we do it. Join in and invest with us, but we've got to have some stealth mode that we can call our own.
Fair enough. So current events.
I've got to go in a couple of minutes because I've got to talk to my colleague at Juvenescence, which pays my annual wages.
Absolutely. Well, let me close out with this one. Since you've written the book, Eat Just got regulatory approval and then very quickly was introduced into restaurants. So limited release, but very, very exciting. What has surprised you about that in terms of where do you think that sets us up for the future of this industry? Does anything accelerate or change since you wrote the book, or your view of that based on the timeline of this release this year?
No. If you have read my book, which is very kind of you, but the interview I did with Josh Tetrick of Eat Just, or as it then was known, Just, and previously I think it was called, it's had a few names. It was called, was it Camden Brooks or something like that? But anyway,
Camden Creek, yeah. Hampton Creek.
You're right. Anyway, Josh said that he really appreciated the Singapore Regulatory Authority, and it was far thinking and blah blah blah. He knew very well, presumably, without telling me, that they were about to get approved in Singapore. So literally within a couple of weeks of the book being printed, they got it. But I'm very sure that Lou's going to get approval in the US by the end of this year, and then I would imagine that Mosa and Nita will probably be approved in Europe within 18 months of us talking today. So we're especially in the era of longevity, when we're all going to live to 110 or 120, we've got enough time to put our ducks in a row. Ducks maybe the wrong word, but our bets in a row for the future in this. But do diversify your bets. Don't just go into one, because as I said, there'll be some that fold, some that are sold, and some that are bold, but undoubtedly some of them will fold.
Well, Jim, thank you so much. I know you got to go, but I enjoyed this conversation immensely. I love talking about escape velocity of aging and cultivated meat, and I don't get to do that a lot. So this kind of covered all my things.
Anytime. You're a very good questioner, and I'm so sorry that I look like I was. I'd just been on the executioner's block with bleeding down my face, but at least I'm a human. My blood's coming out. So lovely to talk to you.
Absolutely.
Have a great rest of the day. Thank you very much.
Thanks again.